Welcome back. And in our top business story, prepaid cards in the UAE are on the rise, which experts say may be an essential key to easing defaults on credit cards. At the Prepaid Summit Middle East, experts said that prepaid card payments are likely to grow faster than credit and debit cards, as they started from a smaller base. They added that the consumer's ability to determine how much they want to put on the card is a very good budgeting tool, as well as allowing consumers to manage risk when shopping online. The UAE is expected to see 18 billion in prepaid card payments over the next 5 years, according to experts, with travel, remittances, retail and online gaming leading the way. The Department of Oil Affairs in the government of Dubai announced today the Dubai crude oil price for June 2012 delivery. The department has notified its customers that the official price of Dubai crude oil, which will be delivered next June, will be $0.45 less per barrel than the average daily settlement price of the DME Oman crude oil financial contract in Dubai Mercantile Exchange contracts traded during the next month. The department sets the price of Dubai crude oil in the markets in parallel with Oman oil prices, which reinforces the transparency of pricing process commitment and setting a fair value of crude oil in the Middle East. Emirates MBD has picked a number of banks to arrange a new $7.5 billion program. The bank, the largest in the UAE by assets, on Wednesday it said it had mandated Bank of America, Merrill Lynch, Deutsche Bank, Emirates MBD Capital, HSBC and NBAD as joint lead managers and joint book runners for its upcoming US dollar Regulation S transaction under Emirates MBD's $7.5 billion EMTN program. An emailed press release stated that the issue is expected to be launched in the near future, subject to market conditions. Emirates MBD PJSC is rated A3 by Moody's and A+ by Fitch. And let's now take a look at the stock indices across the GCC. There are signs that China, the world's second biggest economy, is slowing down. So how might a slowdown impact global equity markets? And what about the impact on commodities such as gold, oil and copper? Well, earlier we spoke with Bruce Powers, the head of research at Trust Securities.
Of course, being the world's second largest economy, any slowdown in China is going to be felt around the world. We did have a slower recovery in the Asian equity markets than we've seen globally after the sell-offs last year. The more developed markets like the UK, Germany, and US found a bottom in August, Hong Kong in October, and Japan not until late November. China didn't find a bottom until the end of last year. So we want to keep an eye on what happens in China, particularly in the equity market, because it could be a leading indicator once again. If it continues to strengthen off the bottom of the end of last year, then we could see higher prices. It certainly supports higher prices in the other global equity markets. If it starts to sell off, it could be a leading indicator once again, indicating lower prices for the global equity markets. We're seeing weakening in all three commodities today on the back of the China news. In particular, in oil and copper, any slowdown in the economy is going to affect prices in those markets generally because the prices go up usually when there's economic growth due to expansion of businesses and expansion of infrastructure and development and so forth. In the case of copper, about 50% of the global demand for copper comes from China to support their infrastructure development. So any slowdown in China is going to have a negative impact on copper prices. In the case of oil, it's not just economic growth now that is impacting the price of oil, it's also the potential of supply disruption. And that's another element that helps is supportive of prices in oil. In the case of gold, it's usually fear or risk of higher inflation that is driving the gold price. Any slowdown diminishes that risk, and therefore we see gold prices going down.